Alright guys, your clients right now are going to pay more, between 3/8 to 0.5% higher on all their conventional financing, starting pretty much right now. This has not occurred through market conditions. I'd kind of like to say that one again. This has not occurred through market conditions, but rather through legislation passed and signed just a couple of weeks ago. Let us explain. Here's how it happened.
Well, remember just a couple of weeks ago, Congress was working on a renewal of the payroll tax? Well, this ultimately funds Social Security, extended unemployment, things like that. Well, it passed and it was signed. In fact, President Obama even said, "This is some good news just in the nick of time for the holidays."
I mean, it's good news for some. If you're unemployed, that means the government dole is going to temporarily keep on coming in. But what was the cost of such a measure? Well, the compromise for the short-term 2-month renewal of the payroll tax cuts came with a permanent hike to FHA mortgage insurance premiums and at least a 10 bip hike to conventional financing through Fannie Mae and Freddie Mac, both for the month only of April, so it's not here yet. Right?
Well, as far as FHA is concerned, that MI increase, that's gonna hit in April. So those deals will become unnecessarily higher, and your clients will pay more on their FHA loans at that particular point in time. But on your conventional business, that's another story. Now you need to pay attention because this affects lenders and realtors alike.
Here's the deal. The 10 basis point is added to the yield, not the pricing. That means lenders must pay FHFA, you know guys, Fannie Mae and Freddie Mac, the appropriate pricing to buy that rate back down, the additional 10 bips it was knocked up. So you're asking right now, what's the cost of that?
Well, it depends. What we're hearing is that it's anywhere between 0.375% and 0.5%. Now, stay with us here. This is for April, right? This is when this kicks in. Here's the deal though. Lenders are buying into the April coupon associated with the mortgage-backed securities that you hear so much about now, right now. So if they're buying the April coupon now, that April fee hike of 0.375 to 0.5% is basically effective immediately.
It's worth pointing out that this affects all lenders out there. I mean, all of them. It doesn't matter if you're a big bank, regional bank, mortgage broker, or credit union. This little piece of tomfoolery that was good news just in the nick of time for the holidays, I'm telling you guys, is rotten news for anyone that's buying a house right now.
So to put this real simply, on a $200,000 house, Washington has just added an additional $750 to $1,000 in fees if you were going to buy that rate down to the current market that they wouldn't have to pay last week if this bill wasn't passed.
So let's think about that additional cost here for a second, can we? Like everything else here, the cost is going directly to your consumers, your clients. So realtors, this is intended for you. If you have a situation where there's a lock extension that's required, remember, your lender cannot absorb that cost. Unlike in the past, lenders are bound to the new laws that say they must make the same on every deal. Your clients pay this.
And in this market with extensions on contracts being completely normal, if you blow a lock, your clients get to pay the additional superficial cost due to this payroll tax. Well, we bring this up because, well, you're in the industry, you just need to know what's going on. And you also need to know that in spite of the rhetoric that you hear from Washington about their concerns to fix the housing market and their eagerness to place the blame on your shoulders for being greedy,
that it's them, and it's their actions, and it's their greed that's driving up the cost to the consumers to fatten their pockets at the expense of our recovery and your clients. But remember, hey, it was all just in time for the holidays. All right, listen guys, this is important because that April coupon is affecting your clients right now, and this is a big cost. It comes in a higher rate, or if they want yesterday's rates, they're going to pay a huge sum of money.
Right.
You need to forward this to all your realtor friends, your lender friends, and we need to discuss this. It needs to become a dialogue, so please forward this video along.
It's a good video to have in the can too to show your clients if they run into the situation so they understand. It's not just you giving a bunch of malarkey, right? Hey, with that, please do us a favor, subscribe for free on your right, forward, share down below, leave some comments. We'll see you soon. Think big.
Work small.
Bye. Bye.